Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead.
Hello and welcome. Now before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any of the related items on these my charts. This was all my own original work, as I think you deserve to have that. So with that, LME 3-month copper. The supports on this market are the same as they've been since mid-May, and possibly, if you take out one aberration, since late April. They are the green short medium moving average, currently at 96.29, though that is being and has been tested today, and all this week and last week. Then we have the nearby mauve medium moving average, currently at 95.66, which held up the market last week. The bright red neckline extension, currently at 95.33 of the November 24 to February 25 reverse head and shoulders bottom, and the gold long moving average, currently at 94.22. Additionally, at the start of July, prices rose up into the overhead band of congestion between 97.50 to 99.95, an area I've described 4 weeks ago as a gossamer area, even closing over it, but it was just the once. And prices have come back down to rest on the previous well-highlighted congestion between 93.95 to 96.06, which also contains the 50% Fibonacci line of the October 23 to May 24 move at 94.80. Going back to the moving averages, I said before how I don't like having all these three major moving averages all so closely grouped together, yet here they are, still close together. I'd now like to once more recap, as I have mentioned here so many times before, of the three congestions that we seem to be working our way up through. The first was between 91.83 to 91.86 and is the weakest of these congestion areas. The second is the already mentioned area between 93.95 to 96.06 and is the one we have become clogged down within over April and May, and on which we currently sit. The final one is the also previously mentioned higher up between 97.50 to 99.95. Overall, we have been chewing our way up through for quite some time the 93.95 to 96.06 congestion area, and we even started to emerge on the upside. I added to this 4 weeks ago, and I quote, "It would be the cruelest blow to the bulls out there if the ammunition for this attempt higher should finally run out anytime soon. Just remember the next congestion area overhead between 97.50 to 99.95, end of quote. Well, for now, it looks like the disappointed bulls have finally exited the market, leaving us higher, but with some still significant supports below. LME 3-month aluminium. As I've stated here many times, there are a number of patterns here, one within another, all happening at the same time, all affecting the market in their own way. To start with, and is by far the most consistent one, is the bright red, shallowly bullish shift pitchfork for the mid-December 23 to late July 24 move. For a while in March, we saw prices starting to establish themselves over the middle time, which is currently at 26.74. But as I stated 15 weeks ago, and I quote, it was a tenuous hold over it, and prices dropped down through it and have remained below, pushing further down. However, this pattern still works at the lower time, currently at 23.65. End of quote. I added 14 weeks ago to this, and I quote, "This is one to keep on this daily chart, as the low of the move has been right on the bright red lower time." Additionally, nearby we have the bright green neckline, currently at 23.64, of the October 22 to May 23 head and shoulders top, and the purple neckline, currently at 23.66, of the March to May 2023 head and shoulders top. Both these have been pierced, but we have not as yet closed below either. And that's the end of the quote. We've seen the bright red lower time punctured but repaired with no closes below it, and this action worked pretty well at showing the low of the recent move down. The bright green neckline was breached with only one close below it, and the purple neckline was breached with two closes below it, but one of these was barely below. Thus combined, these all eroded the bearish incentive enough to halt the immediate declines mid-April. basically in between the bright red lower tine below and the broken bright pink lower tine above over it, which is currently at 24.67, and that's of the breached and since repaired much bigger, much longer term November 2015 to April 2020 bullish Andrews pitch hawk. Now from late April to date, we've seen a number of attempts at piercing higher. In late June, the market pierced on the upside the flatlining gold long moving average, currently at 25.68, reaching up to congestion at 26.50 and just short of the big old 50% Fibonacci line of the 2008 to 2022 move at 26.75. We've since pulled back to sit on the gold long moving average, which is within a small congestion band between 25.63 to 25.81. So looking back some 12 weeks now and at every opportunity since, I said, and I quote, "Right now I'd say the market's contemplating one of two actions. To either treat this as a potential bearish half hesitation move, or do what it did back in July and August last year at approximately the same levels and turn back upwards. I'm watching prices and their reactions to the overhead pink lower tine and the bright red lower tine below, and I'm also on a watch out for any false breaks as well." End of quote. Since then we have gradually, achingly, moved back up, and I added some 4 weeks ago, and I quote, "To be honest, beyond this we have resistance at the December 2021 low at 25.81 and at various levels at 25.63, 25.69, 26.08 and 26.22, but these are not that great. So we could see a move up to the big old 50% Fibonacci line of the 2008 to 2022 move at 26.75, end of quote. This is the case right now, but with a small twist. We seem to be constructing, and it is early days on this still, but we seem to be constructing a mid-April to date bull channel. It's currently 25.33 to 27.21. This is not highlighted on my daily chart as yet, but the lower trend line looks good, though the upper trend line is only a 2-pointer right now, but is far enough above not to be much of a concern for now. I'd now start paying close attention, in addition to all the other supports, to this rising lower trend line, currently at 25.33, as it seems to have some significance. LME 3-month lead. The key features here, and some of them have been here for a while, had in the past all related to a very large broken descending triangle or a related broken descending wedge pattern. However, a newer mid-April pattern is starting to show itself. Now, the broken descending triangle and broken descending wedge patterns are both made up from an early July 24 to early March 25 purple broken downtrend, currently at 1886, now well and truly broken, and for the descending triangle by a bright red broken early August to late December 2024 head and shoulders neckline, which is currently at 1957, which had early acted as an immediate support zone. Then for the broken descending wedge pattern, well, this is made up from below by a dark blue broken neckline extension, currently at 1881, of the July 23 to February 24 head and shoulders continuation pattern, as well as the earlier mentioned and common to both patterns, purple broken downtrend. We've had breaks out of these two patterns, false breaks, both above and below, but in mid-May the market waltzed out more or less sideways for a final time on the top side. The key congestions the market had to overcome were all centered around the significant congestion seen between 2001 and 2003, a small congestion zone which gained significant attention as I noted in my earlier video commentaries. We right now have nearby to this the mauve medium moving average, currently at 2032, the green short medium moving average, currently at 1996, and the gold long moving average, currently at 2004. 3 weeks ago, prices took a flyer on the upside, overcoming all these, as well as congestion between 2036 to 2039, including the January 2021 high at 2039, and up to the next congestion at 2060. Which was breached, but which eroded the bullishness enough that we formed a horn top over the last 2 to 3 weeks. And we've reached down today to both the primary and secondary targets for this pattern. However, as I mentioned right at the start, there is a newer mid-April to date pattern has started showing itself. It is based on the bright green mid-April uptrend, currently at 2002, and interestingly is being challenged today. It was originally seen by me as an ascending triangle between May to June, but it has developed into a mid-April to date bump and run reversal pattern. Right now, if this pattern follows through, then we'll have a primary target X down in the 1964 zone, just above the bright red neckline, which is currently at 1957. Oh, that's of the August to December 2024 head and shoulders neckline. And a secondary, harder to reach target X1 down at 1916, which is coincident with the low of January this year. Now, the feature on this to watch out for is that second smaller bump that may now happen based on the bright green trend line. May not, but it may happen before a further move lower, so watch out for that. The issue of any move lower is not the second bump that we have, but that we have, as I put it 4 weeks ago, and I quote, we are also have around here a small congestion between 1971 to 2021. Dating from early February to very early March, though I'm unsure how good this is. The seeming stabilization over the bright red neckline and the newer stabilization over the 50% Fibonacci line at 1971 suggested further attempts higher. However, the resistance from the various moving averages and the small congestion 2001 to 2003 seems to be up to challenging it, and prices have been somewhat bracketed. End of quote. Finally, there is one other point I would like to make, and it's a point I've been making here since the start of this year and will continue to do so going forward. It has been and still is to me the most important point of all. So at the end of December last year, we saw that 2024 had created here a very large and rare pattern, an annual key reversal down in LME 3-month lead. Hence, one should look at all things going forward this year in this metal in the shadow of this longer term bearish pattern.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.